Hope you're having a great day. Wanted to chat with you about the tax write offs and what's right, what's wrong. So, you always hear, at least I always hear, and I'm sure you guys do when you're talking to your cohorts, that, oh, it's a tax write off. I'm going to buy it anyway. So, yes, we may be able to write it off on taxes, but let's take a couple of examples. So you want to buy a new computer, and we're going to go all out. And again, this is not veterinarian equipment, so it's not medical equipment, but it's just a regular desktop computer, or maybe we're buying a laptop. But either way, let's just say it's $2,000. Fantastic. We're going to write that off. Well, guess what? You're not going to get the full value tax-wise for that write-off. If you are in, let's say, the 30% tax bracket and it's $2,000, so we're going to get maybe $600 as a tax write-off, and you're out of pocket $1,000. So you don't have that cash flow. Let's think about the big one. And I suggest this all the time. So don't get me wrong that it's not a good idea. It's just we need to think about it correctly. Let's say you're buying a truck for the business, obviously, and we want to write it off. And we all know everything's getting more and more expensive. So this truck is $70,000. Holy smokes. What kind of tax advantage are we getting from that? Let's think about it. 70,000, 30% tax bracket. We're looking at about $14,000 tax savings. Again, that's a tax savings. Yes, we can get the entire write-off for the truck as a depreciation expense, but we're not getting the full amount as a tax, lowering our tax liability. And again, you're going to be out that $70,000. You've paid that out. It's cash out of pocket, unless, of course, you have a loan, and then you're paying that every month. So, yes, those are tax write-offs. Yes, we want tax write-offs, but we need to do it strategically. We want to make sure that we're thinking about and purposely planning for what we're doing. Now, some other things that are better, should we say, tax advantages. Let's talk about retirement plans. Hope you have one. 401ks are great. Cash balance plans are great. We can talk to investment advisors about all that, but we can sock away a lot of money for retirement, and it's an expense for the business. So what are you doing? You actually are putting money in your future pocket, and you're getting a tax write-off. What about your entity structure? Are you set up correctly? If you are, we can save that self-employment tax, 15.3%. That would be an S corporation, and we would set you up on payroll with a reasonable compensation, and then we would have some distributions to you. We can talk more detail about that, but again, just a very smart tax strategy. So let's talk about some tax credits. And the credits are great. I love credits. Credits are a dollar for dollar deduction in tax because it is a credit against the tax liability. So you're reducing your taxes dollar for dollar. And that's amazing. So there's a couple that come to mind. So maybe some research and development. Maybe you have a process that only you do, and you have refined it and worked through it. Well, we can get a deduction. We can get a credit for that through the research and development. Maybe you have a product that you've created, that only you've created, and you obviously worked through it, did all the planning, the items that needed to be done to get this a functional item. Research and development credit. Let's think outside the box so that we can get this. There's a work opportunity credit, and there's a list of qualified employees if you hire them. And again, we can work through all of that. We can get that list together. but you get credits for that. So there's all types of credits out there that the IRS is just waiting for us to capture on our tax return. And that's where the strategy comes in. That's where we start thinking again outside that box. So that's our mind shift. It's that strategy instead of, oh, it's a write-off, so I'm going to do it. Why are you doing it? If you're doing it in the strategic plan, great. We want to do that. So I'd like to hear, really, I would. I'd like to hear some of the wildest tax advice you have been given by cohorts, maybe some CPAs, maybe some tax preparers. But that would be fun just to hear what it is. So put it down in the comments. Love to read them. That's what I have for today. DM me. Let's get together. Let's talk about some strategic tax planning and tax write-offs. So remember, you run the clinic, we run the strategy. It's your dream practice, and it's your dream real profits. Have a good one.